Hello there, and you've just tuned into Dukascopy TV today. Right now I have Patrice Gautry. He is an economist at UBP, and today we're going to have a look at the Eurozone and what to expect from the ECB. So welcome today.
Thank you, happy to be here.
So first of all, if we look at manufacturing, the PMI rose. Let's have a quick look. What do you think about manufacturing? Of course, Chris Williamson economist from Market, now he actually believes we'll see some growth in mid-part of this year. What do you think?
Yes, you're right to point that these manufacturing indicators have pointed in favor of some improvement in the Eurozone during the course of the year. But we have to mention that this index stays below 50. That is to say, the activity is still in a contraction mode. So what we do expect for this year is just a progressive end of the recession. That is to say, it will take time before we return to positive figures. And my forecast in favor, if we measure the activity in year-on-year terms, that we go back to positive territory in the third quarter of this year. Uncertainty are still there, and recession is still there. It's still a sharp recession, so it will take time for the Eurozone to recover.
And Standard & Poor's said its AAA rating for the Eurozone was actually stable. It said the ECB played an important, effective role in containing the ongoing financial crisis. It also said that they expect the bank will successfully maintain price stability, which is its primary policy objective. Now, what do you think about this? And of course, what are you expecting to see from the ECB?
Yes, I do expect a lot coming from the ECB at this point of time for this year because, as we mentioned previously, we are in a sharp recession within the Eurozone, and the ECB has to do more in order to protect the Eurozone and to stimulate the recovery within the Eurozone. What do we need? In fact, perhaps to decrease further interest rates. We are still room for another rate cut of 25 basis points, the first one. The second one is to continue to inject liquidity. At this point of time, the European banks have improved their situation, so they begin to reimburse, in fact, the different LTROs. So there is a problem in terms of liquidity. It means that a contraction in terms of liquidity for the Eurozone, it could be a problem. So what we need is that the quantitative easing from the ECB must be more aggressive. That is to say, to make a specific quantitative easing dedicated to the credit situation, and even perhaps to activate more action within the markets. And there is also the problem of strong appreciation of the euro versus the US dollar. So a lot is still needed, even if there are good results, but a lot is needed coming from the ECB.
And what main economic events and data should we watch out for?
Of course, the next meeting of the ECB, which is expected next Thursday, the consensus is not expecting a lot in terms of decisions. There are no interest cuts coming from Mr. Draghi, but what we do expect is something coming during the press conference, Mr. Draghi to specify his position concerning the recent appreciation of the euro, of course, and the second one, the impact in terms of monetary base of the reimbursement from the banking sector of the different LTROs. Will this have a tightening process, a tightening effect on the monetary base of the Eurozone?
Can I ask you one more question in terms of what happens if the UK leaves the EU? What type of effect will this have on Europe?
It will have very negative impact. My guess is that, especially concerning the industrial activity, because there are a lot of relationship between the United Kingdom and the core European countries, and of course there are a lot of uncertainties coming from the financial market point of view. And the third one is the change of location. The risk for the United Kingdom is change of locations of big firms, international firms coming from United Kingdom to be re-implemented or relocated within the Eurozone. So a lot of uncertainties and a very difficult economic and financial scenario if ever the United Kingdom decides to leave the Eurozone.
Thank you very much. Now we have a question from one of our guests. Eckhard Ernst from the International Labour Organization has a question for you, so let's have a look.
Hello, I'm Eckhard Ernst. I'm from the International Labour Organization, and here's my question. Since the beginning of the crisis, we see that there is a job gap that has opened up of around 67 million people worldwide. What do you think should be the priority areas of interventions, and how quickly can we get employment back if we follow your advice?
Okay, great and interesting questions. I have two levels. The first one, the first priority would be the formation and the labor skill. This is a very important and key concern if we look at the G7 countries, and in order to activate and to haste, in fact, the decrease in unemployment rate, formation is a very key sector. The second one is that the ECB and the central banks to continue to deliver cheap liquidity and cheap capital. And what is important coming from the labor market situation is that the small and medium firms create a lot of jobs. If we ease the credit conditions in favor of this specific sector, small and medium firms, it will reinforce the recovery we had in the US at this point of time, and which we expect in the Eurozone. So labor, formation, and to continue to give more liquidity and to activate the credit rebound within the Eurozone and within the distressed countries.
Great. Now let's have a look to see what he says.
According to our advice, three things need to be done. First of all, the high uncertainty that we currently still see in the market has to come down, otherwise private investment will not come back. Second, there has to be a stronger coordination between fiscal and monetary policy in order to stimulate the economy and bring growth back. And third, all policies should focus on employment creation. That means private businesses have to get incentives in order to create new jobs.
Now, Patrice, let's have a look at our Dukascopy question today. If you had $1 million, where would you invest it?
My preferred asset class will be definitely equity. At this point of time, equity, worldwide equity, US equity, there is still value in European equities, and there is some interesting momentum in emerging equities also. So worldwide equity would be my preferred asset class.
Great, thank you, Patrice. Well, that is it for right now, viewers, but do stay tuned to Dukascopy TV for more interesting interviews and press reviews. But for now, goodbye.